Okay, folks, welcome back. I'm going to be doing things a little dirty and raw this weekend. I've been inundated with a lot of stuff administratively and in my personal life, so usually I do the PowerPoint display and it makes it all nice and neat, and I'm just going to go through it. Plus, it's the beginning of the month. I like to show the new people where I get the economic calendar and how to pull it up, so I guess once a month, when new people come in, we'll do it this way. All right, so when I'm looking at the economic calendar, I'm going to forexfactory.com. Clicking on this tab here gives you the date. Obviously, this is the date of my production of this video. The week to come is over here. You want to start that on a Monday and on a Friday. Click that, and then you can apply settings, and then it'll pop up all of everything that's on their filter. Click over here on filter. These are the settings I use. I take off these. I'm going to be talking about all these, so I'll keep that in here, and CAD just for completeness sake, if you want to keep your economic calendar as I would have mine. That's the settings. Okay, so if I'm really interested in Aussie trading, I'll include New Zealand, but generally I don't have it in there. And that's the economic calendar for next week. I'm not going to be going through it, obviously, by day like I normally do, and I kind of want to phase that part out because it's monotonous. But I think Tuesday, the speech here may be impactful for Euro, and at 10 a.m. we have Fed. So Tuesday's going to be a lot of fireworks in New York session, I think. Another Bank of England speaker, so we have a trifecta, if you will, of impacts on the foreign exchange market for Tuesday. And then I think the next day on Wednesday we have another high impact for the dollar at 10 a.m. And apart from that, it's your normal usual suspects. All right, so I apologize if I can be picked up in the microphone with the throat lozenge in my throat. I apologize if you hear my throat lozenge. I need it because if I don't, I won't be able to get through this video. So seasonal, just a seasonal thing I got to deal with. So that means you got to deal with it, unfortunately. So, all right, so let's go over to the dollar index. Let's get through this. We have a lot of business to cover. Here is our daily dollar chart, and how pretty is that? So right away, you can see we went through the buy side liquidity pool as I outlined. We would probably draw for, and now the next draw liquidity is over here. And this is no longer there. So I have SIGUEME in here. That's most likely what we're going to probably want to reach up and close up. If we trade above that, then we are again looking to contend with the old highs. If we get through that, we're looking for a weekly level that I'll let you go through your weekly chart and discern what that 99.98 level is. We'll talk about it should it become salient to this week's trading. We have our SIGUEME here, okay, outlined still on here, and I want to talk about that when we get to Thursday's intraday trading. So let's drop down to an hourly chart. Okay, here's the hourly US dollar chart, and you can see here's Friday's trading, Thursday's trading. Look at the top of the fair value gap that I mentioned on the daily chart. Look at the beautiful reaction. Notice that it did not down to the what would classically be referred to as resistance broken term support. Well, where's that at? Because it didn't go down there. Okay, these are levels that we have been discussing and covering for weeks now, and look at the beautiful reactions you're getting off of these levels. Now, again, I didn't go back and say, well, here's an old high, here's an old low, and we're drawing out these swing points and this and that. No, the logic behind these levels is what makes it work. It's not, let me put a line up on my chart because it went down and bounced there before, so therefore it's going to go down to that level again. I missed so many opportunities and so much losing took place by me expecting support and resistance in its retail sense, the way it's promoted. As I mentioned this morning in my rant on Twitter, some of the things that we see in books, it's just complete nonsense. And well, actually, let's rephrase that. Most of what you read in books is pretty much nonsense. So what I do and what I have been doing for a month now, since we've been really getting into the details of the fair value gap and BISI and SIBIs, it's not that, okay, they fill and that's it. You need to understand that the reasons why they were allowed to be in place will be respected later on by the algorithm. So looking at the intraday price action on Wednesday, we had a nice run here above the equal highs, then found support at the daily fair value gap, the top of that fair value gap, and it found support, creating the low on Thursday, and then expanding up, trading through those relative equal highs. Now again, we're just shy of the next premium array in the form of the daily chart. That's that SIGUEME. So we'll be seeing if there's any attempt to get up there and get that 98.90 level. Just be aware that consequent encroachment may be a factor as well. Let's drop down to a 15-minute time frame. Okay, so here's a 15-minute dollar, and you can see really nice reaction off that daily BISI. And again, nothing really to draw any attention to otherwise in terms of support and resistance. And we rally up to the old equal highs. It comes back down right below sell side liquidity pool on a short-term basis. What's the bias? Bullish. So we look for bullishness on the upside. Retracement down in New York, and then everybody thought this was the end, and it rallied and pumped it up one more time. So again, this kind of stuff with non-farm payroll is what even I can get tripped up on. Okay, and non-farm payroll is a little tricky Friday, but you can see, I was able to snag something out of the cable market. And I'll mention that when we get into it. So let's roll over to euro dollar. Okay, so we have the euro dollar daily chart. How nice is that? Isn't that nice? It's nice and clean. It's very, very specific. It's nothing after the fact. Everything is just exactly how I outlined. It's such a beautiful thing to see it over and over again. Now, I mentioned that I wouldn't bring this these fair value gap levels up on euro dollar, but I just want to have it in this presentation because it's just so good. This is ICT classic. Okay, so when we rallied up into that the previous week, I mentioned that this is probably suspect, and it's all part of the market maker sell model. This is another level of distribution. We're trading back up into a breaker, which is this high, low in between, running the highs out over here. Multiple failed attempts. Again, I gave you the bias, gave you the narrative behind all that. The market did, in fact, make a run with the sell side liquidity pool here. We do have, as I mentioned in passing in the previous recordings, that if we do get below here and we start to accelerate, the liquidity that will be resting right below here, that is the next immediate draw, which is right in here. And I know that doesn't seem like much. Like, come on, Michael, it's a couple pips. But we need to watch what it does when it gets there. So just be mindful of that. And then obviously any acceleration would take us below the lows in, what's that, October? Yeah, October 1st of 2019. Obviously we can come back in here, try to fill up some of this imbalance that we've created, may get a little overzealous, come back and test what we classically seen as support turn resistance. That might be a factor here because there's sometimes these examples are shown in books, so therefore it has to happen sometimes. But again, the logic behind all of it is a little lacking in my opinion. But nonetheless, this is such a beautiful thing to see. It's so nice to see that when you have the ability to sit down and visualize these very things in the chart before it comes to pass. It's very empowering. It gives you a lot of confidence, or it should be giving you a lot of confidence that you're able to see me outline this using the things that I teach in the content and then giving you my experience. So without doing all the chest beating, because I'm sure there's a few of you rolling your eyes thinking, oh, here he goes. I'm just saying you paid to learn how to do this, and you're seeing the fruits of someone that does know how to do it. So the hourly chart, let's take a look at that on the euro. Okay, so here's the hourly euro dollar chart, and you can see we had a run back in here. We'll look at on that lower time frame as a reminder. I kept that in here just to show you. It's really nice to see that reaction. The old lows down here, and then the level I just added to the daily chart is down here at the really small equal lows where I drew the magnet to. That's below here. So a fair value gap in here, trading back up to a bearish order block. That is, again, for all these new cats, they're in here now. Which order block do I pick, Michael? There's got to be a bias. Obviously, I've outlined the bias that I was looking for a dollar to go above its daily equal highs or relative equal highs, and we've seen that. So therefore, we would have all the foreign currency bend the knee and go lower. Bearish order block is the up close candles here. Price runs up into it on Thursday. Fair value gap, beautiful run into that. I'm going to keep the annotations to just audio, just commenting. I'm going to let you do the annotations to your charts. So fair value gap in here, trades up into it, creates the high of the day. Distribution, again, fair value gap again as well, near and at the old daily low, or the sell-side liquidity pool I mentioned, which is what we traded into on Friday. This is what it's traded up into, the fair value gap here, and then the distribution attacking a deeper run below that daily equal low. So such a beautiful display of symmetry on euro and dollar. Let's drop down to a 15-minute time frame. Again, 15-minute time frame. Now, when you look over here, it doesn't look like it's so obvious that there was a fair value gap. Okay, and this is the reason why you have to cycle through from your higher time frame down to your lower time frame. What doesn't necessarily look like an imbalance on these smaller time frames, because the imbalances that are formed in price, they're not just relative to price themselves. It's a time and price thing. So the amount of time that price is offered at a particular level is important. It's crucial. So, it's spent a little bit of time in here, but these are all just individual 15-minute candles. So where there was an imbalance on the downside in the form of a fair value gap, SIBI, sell side imbalance, buy side inefficiency, that is explained in the core content. If you're new, trust me, I know some of you just said, what did you just say? Just go back through the commentaries and go through your monthly content, and believe me, it's all there. Okay, so while there doesn't appear a clear imbalance here because of the 15-minute time frame, as you saw on the hourly chart, there absolutely was a fair value gap. And if you don't go down from the top, moving towards the lower time frames, you will not see these imbalances. Most of my new students that are sending me emails about fair value gap or BISI and SIBI, they'll say, I don't see this here, but I see it on here. Yeah, you work from your higher time frame charts down to lower time frame. So if you start a daily chart, there's no imbalance there. Obviously, it's a daily chart. Each candle is one daily interval, but you have the opportunity to see several hourly fair value gaps, and then obviously the same, if not more, in a 15 and 5-minute chart, which we don't do 5-minute charts anymore because the video is already too long. But the premise is higher time frame down. Okay, so just note that it's probably a good idea to go from lower time frame to the higher time frame. Once you've done the top down, do a bottom up. So that way it will give you an opportunity to catch anything you may have missed. Don't rush through your analysis. I got to get in. My wife's watching Netflix, or my husband wants me to go out here and do this and that and buy these new shoes and purse. I know, ladies, that's priority, right? Well, trading and understanding this, you have to do it the right way. And if you're rushing in the everyday world, things that distract you, you're going to miss some things. And you ever looked at the charts and say, oh, that was there, I didn't notice it. It's because you rushed through your analysis. If you go top down, daily, hourly, 15-minute, 5-minute, then go backwards, 5-minute, 15-minute, hourly, daily. And you look for your imbalances, you look for liquidity pools, and you'll have a better chance of not overlooking things. It doesn't mean you won't see everything, after the fact and say, oh, I missed that too, because there's going to be things that, because you're learning, you're going to see things that don't readily jump off the chart at you. So just bear that in mind. And again, the absence of any real run higher because the bias was lower, higher dollar. Fair value gap in here, you got a small one. It trades up into the bottom of that. But otherwise, it's very clear on the hourly chart. And then we see a run lower, non-farm payroll, tomfoolery. Fair value gap, bearish order block, trades lower. And then we have what looks like it wants to go lower. Just be careful. We could get some kind of a reaction. I think that, and I'll save my commentary on general sense of the global front, all the things that's going on in the last couple of minutes of the video. I was going to say something now, but I'll put it off until I'm done. All right, and now let's go to cable. All right, so here's cable. This is our daily chart. We had a really nice reaction above this high here. As I mentioned, this was just too suspect. It just looked like they wanted to send it too high, and all the Brexit, sugar high is gone. We ran into our sell side liquidity pool. The next one, if we get continuation on the upside on that dollar, we will look for the sell side liquidity pool down here, and that will be our next point of consideration. Okay. All right, so let's take a quick look at the hourly chart because everything else is still in play for a potentially higher dollar. So we'll see if there's any continuation lower for British pound. All right, so we have the run into fair value gap here on Friday during non-farm payroll. That was essentially what I was playing off of, but when we get down to the lower time frame, I'll show you what I was looking for. As I mentioned in the video, I was recording as I was trading it. This a really nice heavy distribution right from the jump on Monday. Retracement back into Wednesday, intra-week. Fair value gap as well. Study this gap. Okay, study this gap. Extend that out in time. Fair value gap here as well. There. All of this very heavy. Really unable to make any kind of real serious run up. It could have came back up and traded back into that old hourly fair value gap. It didn't even do that. Could have been a trade back to the breaker. Didn't do that. Just really extremely heavy. Rebalance and then distribution lower. Looking at a 15-minute time frame. Okay, you can see the very small fair value gap in here and back to a bearish order block. Runs here. Multiple attempts to stab into that. Notice that. And that's classic non-farm payroll. And it's very difficult sometimes to get in and not weather more drawdown than you really would like to see, or get stopped out. And if you really want to be in that, go back in and trade it again. So it's one of those particular trading days of every single month. I don't really actively go in, and I teach and preach my students should avoid those because it could do anything on those days. You don't know how the central banks are going to reprice because we don't understand the full sentiment picture like they do. So when we look at the delivery of price on non-farm payroll, just observe how price reacts to the manipulation that took place a day or two after. Because many times what you see in non-farm payroll delivery can be completely diametrically opposed to the new month bias, I guess, or the candle. So whatever you think you may be seeing in price, if you're just looking at lower time frames, may in fact become like a Judas swing. Okay, because classically the first week of every month, we're very aggressive in terms of keeping our frequency low. I guess I shouldn't have said aggressive. We're very we're very slow to act and do a whole lot, let's say it that way, on the first week of every month, because we know that Monday through Wednesday is really the best, clearest signals in terms of reading IPTA. Then Thursday and Friday, they become a little bit more distorted. Now, right away, some of you are going to take that as a personal challenge and say, well, I look and I trade Thursdays and Fridays and I make money. Yes, and you can see I can do that too. I'm saying from my personal vantage point where I am in my trading, the things that I understand that you don't know yet are very clear to me on Monday through Wednesday. That things that you are reacting sometimes to and not following the rules by engaging on Thursdays and Fridays. And I sound like a hypocrite because you saw me trade on non-farm payroll, but that was just me being me. But the idea is you want to reduce while you're learning and you're in development. You want to reduce the likelihood of things that will be problematic to your development and profitability. So non-farm payroll, that's why I say all the time, not for professionals. I didn't come out with that. It was something that actually I think I learned that from Linda Raschke. If I have it right, I believe it's where I picked it up from. But I always thought it was appropriate, considering I lost a lot of money when I was trading S&P trying to trade that, because it was always usually a very volatile thing every single time it came up when I was trading futures. But now, just the average daily range is many times more than what non-farm payroll would create back then in the 90s for S&P. So anyway, we're looking for potentially going lower, but we've been drawing lower for a while now. So we could see some kind of reaction on the upside. We get some weakness on the dollar, and I'll mention some of those things that may be impactful for that at the end of the video. Let's go over to Aussie dollar real quick. Okay, so here's Aussie dollar. Here's our relative equal lows, market maker sell model, and we trade back up into this old swing low. Multiple attempts to trade up here and then sank it down. They really manipulated Australian dollar on Wednesday and Thursday. There was a lot of manipulation in that currency, but ultimately it traded down to our objective, and it's dropped into an hourly chart. Now this is one of those times when you're looking at price, you really want to take a look at your own chart and study it. I showed you the market maker sell model on the daily chart. Now look at it occurring on the hourly chart. So this is the point when we say price is fractal. A fractal is something that repeats in similarity on all time frames. Now, there may be slight little variances in terms of what it looks like, but generally the concept is repeating. Consolidation, leave the consolidation, back to consolidation, so it's accumulation, reaccumulation, smart money reversal, low risk sell, distribution, 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 boom, runs out equal lows. This is the market maker sell model. Okay, it's not Wyckoff, it's not whatever else you want to call it. Okay, the way I break all this stuff down in here is highly specific, and it's very precise. The elements of what we look for in this fractal is pretty much the basis of how I trade personally, and there are specific price action models. When you're a charter member, you'll learn what they are. So I actually go into very specifics and say these are the models that I like and prefer over, and pretty much look for every single trading week. That is in this particular fractal. Okay, so when we talk about market maker buy and sell models, a lot of you are familiar with that because of my free tutorials, but in mentorship content, the things that I say about them are very specific, and they go way beyond what was otherwise explained in my free stuff. At the top of this fractal, this high here, you want to look at everything to the left. All of that's the buy side delivery. Everything to the right of it is the sell side delivery. Everything on the sell side will match up with a buy side delivery array on the opposite end of the curve. So this is the curve. To the left is the buy side. To the right is the sell side. Because every buyer and seller has to have a counterparty, interbank delivery is the same thing. Because the central bank is offering the liquidity, or it's offering the commodity, or it's offering the currency to be traded. They are always in the capacity of selling. So they're the producer, the storehouse, the bank, basically. So where do we get the currency from? We get it from a central bank. The measures that are used to control, manipulate, and reprice all currencies, those things are linked together in the same capacity as a counterparty would be for a buyer or a seller in the marketplace. So when we say the market is being driven by buy pressure or sell pressure, or the buyers really have control of the marketplace, traders never have control of the marketplace. That's a misnomer. It's complete nonsense. Okay. When I say there is no supply and demand, I mean it. There is no factors that make buying and selling in the realm of retail or large funds. They aren't the buying and selling pressure. They're not. Because when the central bank turns the corner and stops offering price higher, because it doesn't matter how many people buy it, they can still control price. It sounds like, there's no way this is possible. It's too big of a market to have kind of control over it. Yeah, it's literally just like that. Okay, because the central bank is they're the storefront of that currency. They can say whatever that price of that currency is whenever they want it to be. That's what it is. That's exactly what happens. Okay, so when you think about the black swan events that come out, and you see these big crashes in these world currencies, okay, that's not sellers coming into the marketplace. Okay, it's not, oh, we ran out of buyers. No, it's not. That's not how that works. It's the central bank immediately repricing because it clears everyone. It upsets the current sentiment, and then they have to allow price to create a new sentiment, and then they start working with that. But every measure of buying and selling from the interbank side, so in other words, when I teach bullish order blocks and bearish order blocks, bullish breakers and bearish breakers, bullish mitigation blocks, bearish mitigation blocks, all these are specific PD arrays. Just like a fair value gap is a array, there is the BISI and SIBI within the fair value gap family. Okay, with that specific array, it's divided into those, and the BISI and SIBI get divided into something else that I'll teach in 2020. So there's more factors that go into these things that I'm teaching, but you have to escape the retail view of it. When I say there's no supply and demand, I mean it. I'm not just putting up a proverbial middle finger to people that trade supply and demand, because as I've said, in its infancy, it's a good way of looking at price versus the classic support and resistance, but it's flawed and it doesn't give you the real picture. It'll give you setups, but if you study people that do supply and demand, even the best of them, you now understand, especially if you're charter, you can see where their trades are going to go wrong before they even do it. You can see it because their supply and demand, like tactics or whatever, it doesn't include narrative, and narrative comes from the interbank. Unless you know why the bank is going to reprice or clear a pool of liquidity, purge it, or run it and accumulate at that area again to go higher or lower in continuation, it doesn't matter what supply and demand zone you're looking at, because it's going to be useless to you. Okay, so, and it's the same thing said with my order blocks. You know, people that get on there on YouTube or create these little courses or whatever that aren't really just basically parroting what I say. They think they understand it or whatever. They're going into the charts and they're talking about down close candles and up close candles and assuming that that's all that's necessary, and it's not. There's so many other things that go along with these specific parts or cogs in the greater whole. And that's mentorship. It's not, here's a lesson, here's a lesson, here's a lesson. All right, you're learning mentorship. No, mentorship is an experience. It's you being here, watching me use these things, explaining the rationale behind it, the things that I'm thinking before the market moves, the things I'm concerned about, the things that I'll say, okay, if this doesn't pan out like I want, this is the other scenario. But I'm not saying let's do a plan B. I'm saying this is what will prove I'm wrong, and I'll submit to that process of being wrong, and then I'll wait for more information. It doesn't mean I'm just indiscriminately reversing. Okay, so when I'm talking to you, it's important to take in what I'm saying and why I'm saying the things I'm saying, because that's the logic behind it. That's mentorship. Okay, I can write a book. Okay, I could literally write a book, 250 pages tops, and I could basically compress everything that I ever intend to teach in mentorship. I could do that, but it will be completely useless in the hands of the reader because there's no context to use the things, because there's so many things and factors that you have to use to make these things work. Now, hearing that the first time, it sounds like, oh, then it has to be hindsight because you're picking things and after the fact. No, that's why I tell you, go back and listen to my commentaries before the new one hits the forum. You should be taking notes. And when I say specific things, you can actually write down the minute marker and say, okay, ICT said this is supposed to happen, or this is what's going to happen, or this is what he's concerned about. And then when you see it in price in your own study, you'll say, oh yeah, that's that thing he said, or oh yeah, he was wrong about that. And not to beat my chest, but I'm not wrong a lot. And again, it takes us back to, why are you here? You're here to learn. That means you're going to listen to things that you probably don't feel like you're learning anything from, like this right here, this whole woodshed moment. It's important. It's crucial. It's the things that I wish I would have had when I was coming up, because it would have set my mind right, because I was trying to do too much, too often, and it was detrimental. It put me back. It didn't put me further along. It didn't speed up my learning curve. It didn't shorten my learning curve. It made it worse. It was like a roller coaster when I did those things. If I had someone like you have right now in me telling you the things I'm telling you, I'm telling you the things that will prevent you from losing fortunes. Because I didn't lose just $20 accounts and $100 accounts. That's not what happened with me. I lost 6-figure accounts. Okay. It was very sick. I didn't like it. It was not fun at all. Nothing about it was fun. But I learned by doing the things that I'm teaching you to avoid. If you do the things I say and avoid the things I say to avoid, you will get there sooner. It doesn't mean it's happening overnight, but it just means that you'll get there quicker than you would be if you try to do it your own way. Because if you came in here with your own way mentorship in mind, you're going to struggle. And you're going to be the ones that send me the most emails. And I can tell you, the ones that start off at month 1 and they exhibit the same things I warn everybody about. If you are someone that needs to have your hand held every moment of the day, and explain every minute movement in the price action, you're going to struggle here. You have to let that go and just trust what I'm teaching you. Each graduated step gets you closer to understanding. It can't be done any other way. It really can't. And because you don't know what I'm still yet to teach, there's a lot of depth there that is, well, it's overwhelming if you don't spend the time doing the things I tell you to do here. And clearly it works. If you're not able to see the value in it, then I don't know. I mean, there's nothing else out there that's going to be this clear and this plain and this transparent. I mean, I'm telling you before it happens. So the logic is real. The delivery of price is 100% manipulated, controlled. If it wasn't, I would not be able to tell you how I tell you this week after week. I understand the controls that are behind it and the things that are in motion that prevent other things from happening. That's how I can comment in these live trades and say the things that's going to happen, and it happens, because I'm not leaning on anything retail. But I am waiting for moments when it's diametrically opposed to that I know how price is delivered. And when there's that arm wrestling match between what retail thinks they see in price versus what I know is behind in the underlying pinnings of the market, that's where your highest probability, low risk setups are. It's those moments. And you're asking right now, okay, I'm going to send them an email. What are those moments you're talking? That's what mentorship is. Me pulling them out and showing you, and then going back over, you do this. You go over this in terms of the archive. All of you are asking, your first month folks that are here. And this goes for you charter members. Don't think that you're exclusive, okay, because you should be doing the same stuff. New members are coming in. They've already digested everything in the first month's content, and they've already made their second month's payment. There is no fast tracking here, and there is so many archives. The weekly commentaries, you need to go back through them. Okay, go through them. And you don't just go through these lessons one time each month. You need to cycle through. And unless you know what I'm going to say verbatim in the video, you didn't watch it enough. And I mean that. It sounds silly, and it's not, you're supposed to be worshiping me or anything. It has nothing to do with ego. I'm telling you, unless you ingrain this in your mind, okay, and are able to say exactly what I'm going to say about that specific topic in the video, you haven't watched it enough. It's simple as that. I could get up there and do Larry Williams's 4 VHS video thing verbatim. I mean, that's how much I watched that thing. So you need to have that level of commitment, because if you just go through this nonchalantly, that's the results you're going to get. It's going to be lackluster. It's going to feel like, well, this isn't as good. He doesn't explain it that good. No, I explain exactly how you learn it. But the part is you want to hear me say, buy here, sell here, put your stop here, our target's going to be here, and let's watch how it unfolds. That's not mentorship. That's signal service. I didn't promise that. I am telling you what's about to happen. I explain how it's going to happen. And then after it happens, I go in and I give you the fine details about what it is, where you pull the information from your content, and you plug that in. And that experience, that little segment of experience that I share with you every single week, that is mentorship. Because you're seeing it be done. You're seeing it be explained before it happens. It's not hindsight. It's not contrived. It's not form-fitting. It's not cherry-picking. It's absolute mastery. And once you submit to that process and you say, okay, he's telling me, and I'm referring to myself here, I'm telling you, the way you learn this is to constantly expose yourself to it. Let everything go. Your timeline is not important. I'm 53 years old, Michael. I don't need this long-winded videos. Get to your point. I don't have time for this. I wasted too much time and money doing other stuff. Well, that's not my problem, is it? It's not my problem. That's your problem. And the way you fix that is submit to the process that I'm laying before you. 53, I'm about to be 50. I'm about to be 50 years old. I'm going to be 48 this August 8th. I'm not happy about it, okay? But I just know that if you submit to this, your whole life changes. Once you understand it and you learn it, 24 months, you're completely different. 36 months, you're on a different level. In 5 years, what costs usually to pay off a car, you're on a different plane altogether. All of you have different goals, and I understand different walks of life, and you have different time constraints. But you act like tomorrow is promised to you, and it's not. Just because you're a certain age and you think, I got to do this by this time. Why? If you have that mentality, you're going to struggle. You have to openly submit to this whole process. And you can clearly see you're in good hands. I'm holding your hand the right way. I'm pushing you when you need to be standing by yourself. And I'm standing right there when I know that you're going to need me to guide you through it. That's mentorship. All right. So Aldi dollar, you can see we rallied up, creating the high of the week on Wednesday. A lot of manipulation in here. And it came back in fair value gap here, distribution, small little fair value gap as well there, and bearish order block. Fair value gap just came up into I think this high here is 67.23.8. And the high here is 24.3. So yeah, we went just a little bit above it. That would be your institutional entry drill there, and distribution heading for the relative equal lows here for that sell side liquidity pool. Dropping down into a 15-minute time frame. You never thought we'd get there, huh? Just a real nice symmetrical market going lower, moving away from the key level. And then heavy distribution on Friday, going into non-farm payroll, a little bit of whipsaw, clearance of buy-side liquidity, and now we're just hanging around. I am not terribly bearish on Aussie dollar now. You have to be really careful. I mean, we're at a really low price. Not that it hasn't been lower than this. It's just at some point the bank's going to say, okay, we can't be free. It can't be nothing. It's got to hold value to some degree. So I would like to see, or anticipate rather, some measure of bullishness come in to kind of like change sentiment, to build a willingness to find some kind of consolidation. But if this thing continues to drop, then I feel sorry for the folks in Australia. I don't want you to be upset with me, but there's nothing I can do about that. But nonetheless, beautiful opportunity to see how I worked within this market. I moved my stop really tight on it, and as you clearly saw also on Twitter, I got stopped out, and I was unwilling to get back in because of principle. As much as I wanted to go back in and just show that being stopped out and having a $60 trade versus what would have otherwise been a larger win, because it went to my target and beyond, I satisfied that itch with trading non-farm payroll, just so you guys know, because you're always like, you always say don't trade non-farm payroll, but here you are in there trading it. That was me letting my ego, because I use Twitter to manage my ego. I use Twitter to vent. You get my inner musings. Sometimes I'll be talking about something that either gives me a reason to crow and more or less target someone that sent me an email. If it's something I'm going to respond to where I think it's a broad-brushed blanket response that could be served better instead of sitting down answering 50 emails the same way, I do those types of things. Or if it's something in terms of mindset, I'll go on Twitter. But nonetheless, the non-farm payroll trade was me answering that desire by ego, because I did get stopped out and the Australian dollar did go exactly where I wanted it to go. And as much as I wanted to let it happen, just like I said, and not to go back in, I satisfied that ego, okay, to go in and trade on non-farm payroll. and traded cable just to answer those critics. Is really why I did it. Otherwise, I wouldn't be in there. I wouldn't have done it. So that's the internal dialogue that took place this week inside of the ICT mind. Let's go over to what else we got to look at here. We have bonds, S&P, and then I promised you the Tesla. All right, so let's take a look at bonds. All right, so here's the bond market. This is the hourly chart. Now, obviously, you're going to take those charts that I posted throughout the week and look at those moments inside this context. Okay, I'm not going to sit down and say, here's the 5-minute chart, the 15-minute chart, the hourly chart, the daily chart, everything put together. This is an exercise for you. This is how we're going to do it for the remainder of this month. And I won't do any more of it because we have the other things to cover. But I'm just showing you the application of what I teach in terms of market structure. My market structure, not higher high, higher low. That's nonsense. Okay, the market structure that I teach is institutional order flow and interbank order flow. And by taking those concepts, yes, there's a lot of things that are highly specific to the Forex markets, but generally you can take a lot of the things that are very specific about Forex, take them out, and you don't lose clarity. Okay, there's no distortion. The model is still there because all of these markets are made and booked and delivered on the same manner they did when they all began. Sounds impossible, sounds contrived, it's conjecture in your mind. That's what I'm holding. It's not conjecture, it's 100% fact. So here we have the bond market, and you can see the previous week we had the gap. Okay, now when I have a gap in the form of a fair value gap or a BISI or a real opening weekly gap, if you're trading futures, you may have daily gaps. If you're trading stocks, you're definitely going to have daily gaps. In the market, when we have gaps, I always tell you, don't forget that gap because it may have reacted to it once or you think it filled it or whatever. These imbalances are remembered because they are real value. And so that's why I named it a fair value gap. I didn't say, okay, this guy taught me a fair value gap. No, it's a fair value gap. These are one of those things that after I met those two gentlemen that came from the higher ranks of how these markets are booked and delivered, all those things that I was exposed to with them, this is one of those things that unlocked on the chart. It was something that always was there, and nobody in all the books that I owned ever mentioned it or talked about it. And I spent a lot of money on seminars. I went there in person, and these people just talked about the same stuff. What you're learning from me is, I'm the daddy of it all. So when you look at it, imagine. So when you see these things, what I'm going to explain here, it's either going to be, it's a polarizing effect. Okay, you're either going to look at it and say, holy crow, that is crazy. I didn't see that. Or it's going to be like, meh, whatever. The folks that say, meh, whatever, you're not going to do well. You're not going to do well. Because if you see this as something that just, it's something that just happens, and now he's going to talk about it, and it just fits his narrative for the moment. Now, this is something that repeats every week. And if you understand what you're looking for every day, these are the things that cause the market to create the turning points. These energetic trades that form many times have this signature behind them. What is that? When an imbalance is respected again. Okay, just because a imbalance has been filled in or a liquidity void is filled in, you don't abandon it. Because now what that has become a real support or resistance area, because where it offered a previous imbalance, then it returned to it and filled it in and rebalanced it, that becomes a balanced price range. So it's important to understand what you are looking at and what you're seeking in price, because it's those things that are outside the chart. Like when we talk about these imbalances, they're not in your chart in the form of, I'm going to reach for a retail tool and it's going to show me this same thing. I have people literally come in here on the first month say, I see this stuff and I have a system that's doing the same thing. No, you don't. No, you don't. Trust me. You're still seeing pieces. You don't have the full picture. Okay, so don't tell me you see these same things in the chart, because believe me, it would already be in books. Okay, I would have already seen it, and it would be out there. It's becoming that now, because people here have loose lips and they want to be feeling significant and they want to be looked up to, and it's all crap. They shouldn't be doing it. But these things that are in charts that I'm pulling out, they are building blocks to narrative. That's, again, what mentorship is. It's not just saying, here, it's going to go here, but giving you the logic behind it, the mindset of why you should trust it. That's how you teach. Okay. It's not just point at something and say, look at this, it's going to do this. Why? Why should it do those things? Why should you be concerned about it doing it or not doing it? Again, that's something that you get from someone that has done it, understands it, and authored it. So when we look at these gaps like we have here on the bond market, this opening gap on the week, again, which starts here, we open up here and we're going to use the low, but we got to go back to the Friday's close or the previous week's close. If there's a holiday or whatever, whenever you see these gaps form, you want to see where the market closed before the gap emerged in your chart. Okay, whatever basis that caused that gap to occur, where there's no candles at all. Okay, that gap starts at the previous candle's close, not the candle high, not because you'd have to do it here with the candle low, because we don't use the opening price. We want to see the low because it came back and rebounds to that point. That's the level. That's the very specific level. That candle's low, you extend in future, and the close is what you extend in the future. Okay, so we can see here on Friday, Thursday we came down, closed in that opening gap all the way down to its close on the previous day before it created the gap. The reaction there is what you would expect to see. And then we have the fair value gap in here. Comes down, fills that in. Expansion. Now we have a market structure shift. Why? Because we have a swing high that's in here that's broke to the upside with the narrative behind it that this is probably going to go higher. If this is going to go higher, that means down close candles should be supporting price and up close candles should be broken. That's institutional order flow. I'll say it again. Institutional order flow, my institutional order flow, not the stuff that's talked about with volume profile, whatever else you want to say is out there. Okay, all that stuff is crap. Okay, it's nonsense. When we have a narrative that suggests that the market's bullish, what we're saying is every down close candle should support price if it comes back down to it, to its mean threshold. Every up candle over here should trade through it. It should go through that. If it does that, institutional order flow is bullish. It will stay bullish until something on a higher time frame disrupts it, or if it reaches a PD array that balances out, and then you have a narrative that could change at that point, or you anticipate consolidation. That's how I work with the expansion, consolidation, reversal, all those things. That's the macro that I follow. I go through that process. But there has to be a context behind it. Otherwise, it's just guessing at up close candles and down close candles. Okay? So you have to have that in your understanding. So the key thing here is Wednesday. Go back and look at the E-mini S&P and the bond charts that I put up and I've been sending on Twitter to links to. You can find it in the news tab on the forum. Like when you first log in, if you haven't been following me on Twitter, if you go into the news tab, as soon as you sign into the forum, the splash page opens up where it has all the places you can go to. At the very top, it's news. Click on that one, then you'll see the February 2020 S&P and bond something. I forgot what the title was, but you'll see it. Go through those charts and then take that as your smaller time frame, little pieces of the puzzle, and work that into what I'm outlining here. So on Wednesday, we dove down, and then Thursday, we hit our weekly gap, closed it in, and then we get a reaction here. Okay, so if the bond market is trading lower, okay, if the bond prices are going lower, that means the interest rate is dropping. Everything in the bond market is going to be a mirror image or should be expected as a mirror image in the S&P. Okay, so bonds go up, S&P should go down. Okay, it's like a teeter-totter effect. Think of it like the dollar and euro dollar, same effect. Okay, so when the S&P, when the bond market hits an area where it could potentially be bullish, this is a potential high or selling point for S&P. And let's take a look at that now. If we look at S&P, here's the S&P. Here's on Wednesday. It's finding support at its old weekly opening after running buy-side liquidity. People that see my stuff, they say, okay, it's all about running equal highs and then it's reversing. Wrong. Context, experience, insight that they don't have. Relative equal highs, aiming for the buy-side liquidity pool over here. We consolidate. Bonds hit their level, closing in their opening gap from the previous week. Now bonds are potentially bullish. What's that mean when we go into the S&P market? Well, it's going to be hard for this market to rally. But as it's running lower in the bond market from Wednesday going into its, again, I'm talking about the bond market here. When it runs down here to close this in, on Wednesday, this is going to be a buy for S&P. And that's what you get here. What does it reach for? The buy-side liquidity pool over here. At the same time it runs the buy-side liquidity pool in the S&P on relative equal highs, that's when we're getting the turning point that's occurred on the bond market. So it's signaling, okay, the buy-side liquidity pool that's been ran out on the S&P, that may be a catalyst for a reversal after running that buy-side liquidity. And we're seeing that break down in here. Now we have an imbalance in here that may be a factor. If we come all the way back down into the gap high, that, in my opinion, I don't think they'll take it that far to take it higher. I think if they run this area here, that would be enough. And then the bond would have to start moving its way lower for S&P to rally. But I want you to take a look at the overall narrative that I've shown you here. We have a fair value gap as well here in the form of a SIBI, sell side imbalance, buy side inefficiency. Look at the reaction here. It trades down into it. Yes, it wicks in, but it gives you the institutional entry drill. That's your buy. If you didn't catch it here, you can get it here. What are you aiming for? The buy side liquidity pool over here. So frame all these things, okay, that I'm outlined here, and use the pieces I gave you, every intraday chart that I posted in the news section under the I can't remember it, and it sounds terrible of me and it's very unprofessional, but I have too many tabs open and if to do it, it's going to be a problem. So just know that it's underneath the news tab in our forum, and you'll see that thread will be active for the whole month of February. But I promise you, if you go through the motions of everything I've outlined here, it'll give you a whole lot of clarity as to why those things you see me pointing out in the bond and the S&P each day, why it was significant in this context. And then light bulbs will turn on. You'll start seeing things. It's not just Forex. It's in every market. It's the same things that repeat over and over and over again. All right, so lastly, I promised you that I would talk about the Tesla stock. And as you know, I tweeted back in, what was it, October? I think it was October. I tweeted in here, I said, would you buy this or sell this? And it didn't look like this particular chart, but I zoomed in right in here in this little piece of price action, this fractal. And I want to kind of like show you in brief fashion the context of why I even brought it up. Okay. Before I say anything more, just know that the things I talk about in the stock market and how to do that, it's covered in the mentorship. Okay. So the things I don't say here, you want to go into that section. If you're a charter member, you'll see right away it just unlocks. So the month of August is like a wild card month. Okay, there's a sweet spot that takes place between August and November where the market creates a low, and it's such a nice way of looking for bullish stocks to get in sync and trade stocks to like the first week of February. So I just dropped something on you that we are in that now. The first week of February can classically give you a intermediate term high. And in a couple minutes, when I finish talking about this stock, I'll give you a few minutes of kind of like a opinion. Okay, and so that makes the video even longer, I know, but nonetheless, it's something I'm going to talk about, and I don't want to go on social media to do it. So we have this gap here, Okay, price moves lower. And inside of August to August 20th, why am I using those dates? You'll see why in a moment. But I mentioned that an early turn can happen as early as August. But generally, it's like September, October. That's like the sweet spot. But in extremely bullish years, you'll find that the turning points will occur in August. And what we're looking for is a index divergence. So I'm going to show you the NASDAQ. This is a daily chart. And I want you to take a look at these lows. Okay. So you have relatively higher lows between the 1st and the 20th of August of 2019. Then in the Dow, we have lower lows here. And then slightly higher, but I'm just going to call that flat, okay, for S&P. So if I go through them, which one is making the higher low? So what area of the marketplace are you going to be looking for your buys that are going to be the strongest one? Inside the NASDAQ. Okay, so NASDAQ stocks are showing relative strength for bullishness on the upside. So we have an index divergence there. It's in the month where we anticipate a potential turn place for the stock market to go higher. And now, if you go through the process of looking for stocks that are fundamentally strong, if they have all the tenets I talk about for finding a strong stock, that's when you look for it, when you have these moments like this. Okay, Tesla was one that showed that from a fundamental basis. By itself, it doesn't mean anything. You have to wait for something technically. So what is that? Well, yes, we made lower lows here. So it doesn't look like a relatively strong stock at that moment. But we are looking for stocks going forward that give us buy scenarios that will show relative strength. Okay, so what does that look like? Well, we have a gap in here. It goes up and closes that gap. And we have a fair value gap here. But the context, we don't look at this area right there. Because the market came down, ran some liquidity, distribution, only takes it to a gap. Inside this bullish order block, price starts to show higher movement. Buy side liquidity rests above this high here. And it's fundamentally strong, as Investors Business Daily would outline, or at least the way I say it should be viewed, using their tools in the context of understanding of the general market. So if we look at the NASDAQ, here we can see the NASDAQ diverged from what we saw in the stock price of Tesla. Here we can see all of the institutions, the big banks, the big players buying Tesla. How we know that? Because now we can see Tesla is outperforming the general market index. So there's weakness seen on the index in the NASDAQ, but is that same lower low seen here in Tesla? No. After it fills a gap inside of a bullish order block after the general market turn in August. So we're going to anticipate bullishness on the upside. Right here, it's coming back after it closes the gap. I don't think it's going to go lower. I'm watching to see if it wants to go higher. And for disclosure's sake, no, I didn't buy Tesla. Okay, I don't own individual shares. If I trade anything in the stock market, it's going to be stock options. And we'll save this discussion for another week, but options were a really good buy in here. Fair value gap, this is a buy here. And I asked everyone on Twitter, admittedly, it was after the gap up. So it doesn't change anything. The context of why I even brought it up and why I even sent it to you was because I was watching it myself. So it's on Twitter. You can find it. It's would you buy it or sell it without this little rectangle when it was trading right there. And nobody knew what was going on. Oh, you don't have enough information. Well, the people in my mentorship know that's a fair value gap. So that's a buy by itself. But do you buy it on the basis of just filling a fair value gap? No. The context, the underlying pinnings is this. Major market index divergence here. Stocks should start going higher. When they start rotating higher, start looking for stocks that are unable to make lower lows if the indice does. NASDAQ makes a lower low. Tesla does not. It's a fundamentally strong stock. Technically, this is a buy. Right? Yes. We're looking for a run above buy side liquidity. And is trading stocks a day trade? No, we don't day trade stocks. But looking at the reaction there is the move. Okay, we get a big run up. And this gap, this is a breakaway gap. We don't want to see it come back down in there. Traders want to see it come back in there and give an opportunity to go long, but it's better if it doesn't. Market comes back down, fair value gap again here. You can be a buyer again. Reaccumulate, new longs. Boom. Knee-jerk reaction. They're trying to scare people out, but really what they're doing is they're accumulating more longs. You can be a buyer. Market takes off again, and we're just going to get to the end of the story. There's the buy here, and it went all the way as high as 968. Okay, so everyone was looking for $1,000 a share. It might get there, but it's just funny, as I was talking about with my son and my nephew as well. I actually talked to my nephew at the very moment when it was doing this very thing down here, and I said, this thing could really go high, and I didn't know how high, because it's, who knows how long it's going to do that. But the plan is, if you buy stocks with this idea here, you're going to be buying stock options that allow you time, and you want to. They're going to be expensive, yes, if you're trying to trade all the way out to February, the first week of February. So you have to buy a stock option that allows that much time. But you don't buy a very close strike price. You can go a little higher and get what otherwise would be considered deep out of the money options. And you pay for car insurance, you pay for fire insurance, home insurance. You're paying your health insurance. Is you have to do it around here. Well, you have to, or at least Obama wanted us to. You have to have it. They penalized you if you didn't. The notion of investing in something that you hope you never use. Well, if you have that mindset in stock option trading, if you look for periods in the marketplace when it's really bullish, which, as I outlined in the mentorship and even in a free tutorial I did before, the idea is you can put a little bit of money. Like, I don't know what your car insurance is, okay, but let's just say it's $200, okay, and I say $200 because my daughter pays $200 a month for her car, and let's say that's what the average insurance payment is in America or wherever you're paying. If you created a bill for yourself to save that every month, and then in the fall, take that money and apply it to several diversified stocks that have this criteria, and you hold on to it with the expectation that it's going to move as far as the first week of February, you have a wonderful opportunity to take money that would otherwise be probably wasted on things and see it give you a return that would be wildly unexpected. And it's that type of thing. When I see people say, oh yeah, you missed the biggest move in the marketplace, crypto. No, those types of moves, that's nothing. That move, as much as you want to cheerlead it on, if you're in here, you're a crypto guy or gal, this move right here in the option market destroys it. It outperformed Bitcoin from its lowest low to its highest high. Okay, you get so many more multiples when you trade the option. It just multiplies exponentially. And if you work that money into new positions, every time I give you a new buy in here, you take some of the premium that you've collected, okay, and the increase of the options that you hold, and you parlay that into more, and you pyramid that up, and you blow Bitcoin out of the water. That type of stuff, that mindset just shows infancy. Oh, you missed. I didn't miss anything. I didn't actively trade Bitcoin. No, but there's moves that I see every single year, and this is one of them. How many stocks did you see me talk about this year in 2019? None, but this one. Look how it performed. There's a reason why I say things, okay, and I draw your attention. Again, I want you to find the things that those that understand in my work, they'll go in, they'll dig in. Why is he talking about this? Well, there's something there. And now here it is. So for clarity, I did not know it was going to go almost to $1,000 a share. No, I did not know that. Okay. But that's the lottery aspect of trading this model. Okay. You can really see some explosive growth. How much? Who knows? That's the point. You don't know. You just want to buy them, wrap your arms around it, close your eyes, and just wait a couple months and see what it offers. Do you ride it all the way up to the highest high in February? Maybe not. If you got a 1,000% return or 2,000% return in an option, or if good grief, 8-10 times your money in an option, are you going to complain about that? Oh, I didn't get the whole move. If you're new, you will. But this is something that repeats every single year. And if you find stocks that are very cheaply priced with a very strong fundamental backdrop, because I do believe there's a real fundamental impact with stocks. It's hard to measure. There's a lot of work and research that it's required to do it. But every month you should create a bill for yourself. It may be that you save $50, okay? Or maybe it's $100, or maybe it's more. If you have a lot more money and you're blessed in that regard, you can save whatever you can afford to put aside. And then in the fall months, we're looking for that turn in the stock market. And when you get that major market index divergence, as I shown in the NASDAQ, the S&P, and Dow Jones, that tells you that the turn is likely to occur. And then to start looking for institutional order flow to give you those signals to find when the moves are likely to occur in stocks that fail to make lower lows. When you have that, it gives you the leaderboard before they're talked about, because everyone's talking about Tesla right now. And they're saying that this drop right here was because they closed doors in China. Listen, this is the same scenario I gave when we were looking at Bitcoin 20,000. Everybody was expecting 20,000. Just like I was looking at saying, okay, what's the next level everybody is expecting to see? It's 1,000. And that was a lot of profit taking going right there. So all of this in here, is it signaling the end of Tesla? I personally don't think so. Will it need to do a whole lot of business in here? Probably. Scare some more people out of it, maybe. I don't know. But is it the time of the year to trade and buy stock? No. So therefore, I'm not interested in it now. We'll wait and see what happens. Maybe this thing does some, funny business, and it becomes a really good trade again this fall. Okay, for moves that go beyond where we saw it trade here. We don't know, but we have to have filters, and filters are certain times of the year, seasonal tendencies, certain influences that come in. They are impactful more than they are any other time of the year. And that's what we want. We want to trade when it's more appropriate and not trade when it's less appropriate to take on risk. Okay? So I gave you a lot of stuff in this one. Hopefully it broadened your horizons in terms of opportunities. It's not limited to Forex. Okay, so if you're in here coming by way of crypto and it's been painful as a transition to come from what you think is understood in crypto, because everyone's still learning that, and that's why I don't claim to know anything about it. But the transition to other asset classes, it's easy. You can move from one asset class to the next. So you may started in crypto, or you may have originated your career in Forex, or you may, like me as a dinosaur, started in commodities. Okay, and then have moved into Forex. It doesn't matter where you came from. Just know that going forward, you have a lot of different opportunities and avenues you can go, and you're not limited, because the things that I teach are there. They're in all these markets. And if you know the sweet spots at the time of year, which is what I teach in mentorship, and understand the process of finding the strongest and the weakest in that sense, you are light years beyond what everyone else is doing and thinking out there. You're way ahead of the curve for these people that talk on the CNBC. You're way ahead of the curve in these money managers that tout, put money in me and I'll invest it and make money for you. You literally are leagues ahead of everyone else. And again, it sounds like bragging, but I'm talking about you. I'm not talking about me. I'm talking about you. You're exposed to things that the general populace doesn't know. When you talk to people from Goldman Sachs, they don't know this stuff. They don't know it. That's not what they do. They don't do anything like this. And Goldman Sachs does very, very, very well. They do very, very well. But those types of people come to me. And when they learn this, it blows their socks off, because it's the reality of it all. It's the truth. The things that they aren't taught now suddenly are staring right at them in the charts. It's there. It's been there the whole time. And as much as they felt so empowered and so in the know, when they meet some kid that came from Middle River, Maryland, and I'm holding these cards, it's shocking. It's pretty shocking. So I want you to be inspired. I want you to feel like you're home. I want you to trust you're in good hands. I want you to see that the things I talk about, they are highly probable in terms of unfolding. Otherwise, I wouldn't talk about it. I wouldn't mention it. I wouldn't bring it up. I show you what it looks like or what it should look like before it happens. I talk about it. And I want you to focus in on that moment, right when you're seeing me talk about it and you don't see it. Question yourself, what is it that you're thinking about the very moment that you feel that opposition to trust or see what I'm talking about? I had a member engage with me this week, and through frustration, they just don't see things. And that, to me, again, just solidifies and validates the things I talk about by having toxic thinking, because the things I'm talking about happen. They're there. But if a person can't see it, they have to take a step outside of themselves and get out of their own way. And that may mean making hard choices and denying yourself certain things. And some of them might be pride. There may be a decision you have to do in your personal life that you have to make a major change, or bring something to light that was hidden. Some things are going to be detrimental to your development. It's psychological. I got a question sent to me. Do I believe that trading is majority psychological and very little in terms of analysis? It depends on what we're talking about, because I can peel that onion back and show multiple layers. I'll just say this. Success in trading has to come with a receptive mind. That means you have to be flexible. Rigid in rules that are meant to protect and preserve your capital and control your frequency in trade. They are rigid. They're unbending. But you have to be flexible in terms of learning more about yourself and how you think about what you see in other people's reactions, overreactions, lack of reaction to what you think you see in the charts. Because the invitation of getting into social media and seeing what other people are saying to either validate or invalidate something that you want to do or not want to do is a problem. It's a trap. So you want to avoid those types of things and focus on the very things I'm talking about. Yes, it's hive mentality. Yes, it's almost cult-like at times. But because I have to fix your attention on specific things, that's the point. that's the way you're learning. I have to draw your attention to very specific things, and you have to think like I'm telling you to think. Because if you don't, you're going to fall victim to the things that everyone else does, and I fell victim to in the beginning. The lessons I'm giving you that you're paying for, I had to pay with, man, it's a lot of pain. A lot of money lost, a lot of hardships, the sleepless nights, the sicknesses, throwing my guts up because I literally blew all that money. And I didn't understand why I was doing it. I was out of control. I was reckless. So you have to know your limitations too. And if you can't control yourself, it doesn't matter that you're learning the things that you're learning from me. It doesn't matter that they work as well as they do. It doesn't matter that I'm telling you before the fact. People are in here still losing money because they don't follow the rules. You're not in here supposed to be trading with live money. None of you know what you're doing yet. Not even the charter members. You shouldn't be doing it. You should be learning. Learning. That means exposing yourself. Oh, well, how long is this going to be? Well, when you go to school, you're mostly are signing up for a 4-year degree. So we are in our junior year. So that kind of like puts it in perspective. So lots of learning ahead, lots of things to consume. So I want to close this video because it's really, really long. But I want to talk about something that's going on. The coronavirus. This is not fear mongering, okay, because I don't fear it. I do believe that this is a bioweapon. or potentially something more biblical. And I'm going to spare you the biblical side of it, okay, because I know there's a lot of atheists in here and other people from other cultures and faiths, and I'm going to respect that. But if you want to know my view on it, I'll probably share it through Twitter, because I don't care what anybody says about me or thinks about me on Twitter. That's my playground. But here, I will say that if it's not biblical, then it is a bioweapon that they released, and it's got multiple reasons for having been released. First of which, it could have been simply released by accident, and it stems from the city of Wuhan or wherever it is that all this stuff came from, because from all indications, it seems that there's a place in that city that had housing and storage for viruses and such, like kind of like a CDC. And if it got out, obviously, that's a terrible thing. But what if it was released on purpose? It doesn't change the fact that the outcome is what I'm pointing at here. This thing can spread, and understand the idea and logic behind what's going on. Nobody wants to be around other people. And if they're sick, they're falling down, no one gets near them to even try to render aid to them. And if people start dropping in the U.S., not to minimize the people that are dropping in other countries from it, but if it happens in the U.S., no one's going out to spend money. Nobody's going to trust packages delivered to their house from Amazon. This has the hallmarks to a real problem of enormous potential. We have the likelihood of our economy grinding to a halt because of it. And all the presidents cheering about how our economy is the strongest in the world, all of them can fall to something like this. Because if no one's willing to go out in public and be around other people, that means the likelihood of them buying things is going to be greatly reduced. And just the sheer reality of the nature of something like this virus, if it gets into the school systems, you can forget about it. Once it gets there, it's everywhere then. And being kept on a cruise ship, I said this to my uncle, the one I lived with when I learned how to trade. He's an avid Trump supporter, and we spar about a lot of things. And like I said, I'm not a voter. Okay, I don't vote, and it sounds terrible, I know, but I think people should vote. But I don't want to be among the group that is actively doing it. And it's just a gray man mentality. That's just the way I live. But if I'm right about my assumptions, okay, and let's say, for the sake of argument, say that I am, and this thing spreads into the U.S. and it starts going all over everything, and a lot of people start dropping, it is going to be a level of madness that we have never, as a culture in America, have ever really dealt with. And it could really be that turning point, that very moment where the market does crash. Maybe the dollar does crash. Maybe other world currencies crash. Maybe this is the reset. Or maybe it's a revelation. That I don't know. I don't know those things, and I'm not trying to unnerve anyone or scare anyone, but you should be diligent. You should be taking precautions. Maybe you should be taking some time and building up your home pantry a little bit, putting a little bit more canned goods and some medical supplies that you would otherwise just never really think of. Maybe toilet paper, things like that. And it sounds silly. Maybe some of you thinking, this guy's going off in lunatic fringe. Listen, nobody knows. Nobody knows. And instead of going out to the bars or going to that restaurant and spending too much money for a meal that costs way too much, that you could have done something more intimate at home, okay, with your significant other, take that, and maybe if you're on prescription medication, take that and spend that for another. Ask your doctors, hey, look, can you just give me another month a supply of this, and maybe it's the prescription they'll allow that to happen. In other prescriptions, maybe it doesn't. I'm just presenting a mindset of precautionary planning and not fear. I don't want anybody thinking that I'm sowing any kind of fear. But no one's really talking about this. And the folks that think everything's always a blown out proportion, it's them trying to scare you into doing this. Look, no one's wanting to talk about it here. And when that's happening, I am all ears. I have a different opinion about this. They're always trying to minimize it. And what happens if the folks that own those 3 cruise ships, they're in the mindset that they think this virus has a 14-day incubation period, and they're holding these folks on these cruise ships. But what happens if the person that has it was a servant that goes through and makes the beds up and cleans the stuff while you're out of the room in the daytime? If they serviced your room, you were not infected yet, but now you're forced to be in this room because that's what's happening. And now they're in that room for 14 days, touching on surfaces they probably never would have touched because they're in and out trying to be a part of wherever they're at in their port of call. But now they're being held in an area, okay, for 14 days. And what happens on the 12th day of that incubation period that they're waiting people through? They touch the surface of that room and they infect themselves. And then now, in 2 more days, it won't be 2 days, I'm just saying in respect to their 14-day incubation theory, they have come in contact with it on their 12th day. They're going to assume falsely, erroneously, that they can be released in the public. But really what they did was they created these human petri dishes. And now they have potentially thousands of people that are infected that would otherwise be feeling that they are free and clear. But they're not. And it's a conjecture on my part. But to me, I think that these cruise ships are actually creating the very thing that's going to disperse this thing. And it's going to go all over the place. Because on these cruise ships, it isn't just one country that is being driven around on those things. Lots of different countries are participating in those cruises. And these people, I said this on Twitter, and I'm going to close it here. If you've never watched the movie Contagion, it's literally just what you're seeing right now. It is exactly that. And that's what it feels like. So it's not to scare you. I'm not trying to overstimulate you and get you worried and panicking. But you should be careful. You should wash your hands a little bit more than you probably should. We don't wear shoes in our house. We remove our shoes before we enter our home. And maybe it's time, if you don't do things like that, you should start doing it. Okay? Admittedly, I'm a germphobe. I don't like the handshake. That's something I just don't do. And maybe it's a practice you should start doing as well, avoiding it. Have something in your hand purposely in your right hand. So that way it minimizes the uncomfortable awkwardness when you meet someone or you see someone. They're expecting to shake your hand. They're less likely to reach for your hand if they see you're holding something with your right hand. That's how I personally avoid it. And you're probably saying, man, what does this got to do with anything? I'm just doing what I promised. I'm going to say what I want to say. And I did it at the end of this video. So everyone that was interested in hearing it heard it. Those that weren't didn't. But just be careful. You have families to look out for, not just yourself. And remind your children about hand sanitation and not overly touching their face and such. And cell phones, wipe your cell phones down a lot because they are petri dishes for everything. Everything that you set your phone down on carries stuff, and when you pick it up, you now put it on your hand again. And every person touches their face hundreds of times, if not more, every single day. And that's what gets you sick. It's not getting your hair wet or coming out of the shower and walking outside. Oh, you're going to get pneumonia. Oh, you're going to catch a cold. Like my family told me when I was a kid. I proved that wrong because I always did it. I've never gotten ill from doing those things. Actually, I felt more healthier. It makes you feel crisp, alive, alert. And you only really get sick by cross-contamination with touching surfaces that have things on it, viruses, bacteria, and then touching your mouth, nose, and face and eyes. And then it gets transmitted that way. Or from some kind of spittle, like if someone coughs in the area where you're at, and you breathe that in, it's over. Or it lands on your person, and you touch it and you put it to your face too. So just be mindful, okay? There's a real concern that this can really spread aggressively, and don't be a contributing factor to it. All right, that's all I got for this one. I will touch base with you, obviously, through a series of tweets this week, I'm sure. Observe what we've been discussing here in terms of the market moves. Really go through the process of doing that exercise with the E-mini and the bond market charts. It's important that you do it, not me show you, because you're going to take those things and put them together, and then in your own charts have annotations. And then next week we'll do the same thing. Okay, so enjoy your weekend. Be safe. I'll talk with you on Monday.